Recording in progress.
All right. So let's start good from our daily time frame. So what can we see on the daily time frame? We could see that okay, obviously good have been buying. So you guys should mute your mic. Mute your mic. Everyone mute your mic. All right. So we could see that good has been buying. All right. So this is the last significant zone that caused the main move. So the market tapped on this support level. All right. So you could see immediately market tap on this support level, you could see the massive push to the upside that it did. So it should show that this is a very strong zone that wants to continue the upward movement. All right. So tapping on this support level, what do we have? We have a break of structure right here. We have this break of structure right here. So let's go to hourly time frame to see it clearly. All right. So on the hourly time frame, this is the break of structure. And then what do we know? We know that okay, this is our range. Our range is from this low to this high. This is our trading range. So we want to buy from around this discount zone and sell around this premium zone. So this is how you trade. You want to buy from discount and sell from your premium zones. All right. So seeing this thing, the market is already in the discount zone actually, and on the daily time frame, we could see that the market tapped on the market tapped on this level. This is a support level also. This is actually a resistance turn support because the market is supposed to sell from here. But what happened is the market invalidated it, and now the market is rejecting up this zone. So the market is probably wants to start buying from this zone. So let's go back down. Let's go back down. Let's go to 1 hourly time. All right. So on the 1 hourly time frame, what can we see? After the market tapped on this very nice zone on the daily time frame, we have a break of structure right here. We have this break of structure right here. All right. So the market broke structure, then it tapped on this resistance level, then it started coming down. So yesterday I already gave you guys a buy trade signal right here. I told you guys to buy good from here. All right. This is a very good trade, but I later told you guys to close your position. We just closed our position around there, just tiny drawdown. The market has not started moving. So the reason I told you guys to close your position is because first thing first, the stop loss is very wide. So if you have a small capital, you might easily blow your account with this wide stop loss. Because if you check, the stop loss is around 100 pips. I don't want a situation. You can see the trade now is in profit, but I told you guys to just close yesterday. All right, because I wanted more confirmation. But now, what I can see is that okay, the market is giving me more confirmation now. So the entry we're going to take today will be from here. All right, so let me show you guys the confirmation. So the market went deep to tap on this week. You can see ordinary drawdown. Many of you will have been crying because this market took the whole of yesterday on just drawdown. Then it's just this morning that the market start going into profit. So a lot of you might have been crying because of this large drawdown because this is where we entered. Our entry is here. Our entry is here, and our stop loss is here. So imagine this massive drawdown. Many of you will be crying. Many of you might even lose your account. All right. So let's take our confirmation. So what can we see? Let me go to the 30-minute time frame. On the 30-minute time frame, what can we see? We could see a break of structure or a change of character rather. All right, because this is the last high that created this low. Then the market invalidating it, giving us a change of character. So this thing now just confirmed that okay, our buy move is correct. All right. So the market gave us a break of structure one, and it gave us another one, confirming that okay, there's nice buy momentum in the market now. So this is a very good time to start looking for buy. All right. So and what do we have again? We have a liquidity sweep right here, giving us our range. We have this liquidity sweep right here, giving us our range. Our range now start from this low to the next high. All right. So can you guys hear me well? If you can hear me, quickly unmute your mic and say you can hear me. Let me know you guys are following.
Yes, I can hear you.
Yes, I hear you.
Yes, I can hear you.
All right, all right. All right. So this is our trade for today on gold. This is our trade for today. So what made this zone very good? This zone has liquidity sweep, nice. The zone has inducement. This is a very good inducement. Two, and then this trade has is around the discount zone. So very good place to take a buy on gold right now. Not right now, oh, it's a limit order. So I'm going to send the trade limit order to the group now. So you guys should be active. Let's make money today. So let's just target. Normally, we know that okay, this market now should start even just start buying and start going up. You could target here as your final TP, but me, I just like doing a 1 to 3. You get like if I want to reach one, I want to get 3. Like that consistency is nice. But these are overall targets, and this is a 5 hour. This is a 5.5 hour.
I don't want to
Mute your mic. Mute your mic. Who is this person? Who is this person now? So this is the trade we want to take today. So the trade is 5.5 hours. So if you are just wasting $10, you'll be getting $55 on this trade. If you hold to the overall TPO, just wasting $10, will be getting $55 on this trade. All right. So this is our trade setup on gold. Let me take a screenshot and send the trade signal to the academy. All right. So this is what we have on gold. Let's check other pairs. Let's check USD Let me delete everything. So let's start from our daily time frame. So this is USD What can we see? On the daily time frame, we could see that okay, this market it has been bullish actually. But then if you go to the weekly time frame, let's go to the weekly time frame. You could see that okay, the market is rejecting off a strong resistance level right here. So the market is rejecting off this strong resistance level on the weekly time frame. Why on the daily time frame? We are still in a structure. This is the last structure. The market gave us a break of structure right here. So this is the swing low that caused this high. So this is our range for now. This is our range from this low to this high. So we want to buy around this, discount zone to take price up. But based on the weekly time frame, we see that okay, this market tapped on is a very strong resistance zone that this resistance zone might even just send price coming down. All right, but we still have this range. You get, the thing about trading, we do not predict the market. What we do is we react. I might have a couple of setups and things I'm hoping to see, but what I want to do is I want to follow what the market is giving me. You get, I know that we tapped here, we might sell off, but I just put it into consideration first until I get reason and I get entry backing up my sell setup. That's when I'll enter. You guys get. All right, so we have this range. Normally, we'll be looking for buys around here because if we're following this main structure, we're in around the discount zone. So it's a good zone to look for buys. All right, so then the market tapped on this strong resistance level. All right, let's go to the quality time frame to see what the market is giving us. So we tapped on this resistance level. All right. And what do we have? We have a break of structure because you can see this is the last high that caused this low. Then the market invalidated it, giving us a break of structure or a change of character rather, because we've been selling. And so this is a change of character. So seeing this, we know that okay, the market is poorly respecting the buys. You get, because the market has been breaking highs and respecting lows. So the market is respecting the buys. All right, let's go to the 1 hourly time frame. All right, so on the 1 hourly time frame, what can we see? All right, so we just see the market just invalidated this high. All right, and before that, we have this structure. This is our last structure, break of structure. So this is our last structure from here, and this is the range from this low to from this low to this high. So we want to buy around the discount zone. All right. So the market already came to the discount zone. It tapped on this level right here, this O and C level. So the market tapped on it fine and good. All right. Then what do we have? Let's go to the time frame. We'll get our entry. Market is already buying from this zone. Did it give us free entry? Did it give us? I don't think it gave us on. Let me go to 5 minute time frame. Okay, I think there's small thing here. I think there's something here. All right, let me go to the 15 time frame. All right. So on the 15-minute time frame, I think this is a very good zone to also look for buys. All right, because the market tapped on our discount zone, and here we have a change of character. But the market has been respecting sales. Then we invalidated this last high. We invalidated it, and now there's inducement and this zone that swept liquidity. So this is a good zone to look to take your buy on USD JPY. This is a good zone to take your buys. All right, but I will just focus more on gold. If you notice lately, I've only been dropping gold trade signals. I've not been dropping other pairs because other pairs have been moving wide lately. Like I rather just trade gold, and good is cleaner. The price action is better. The price action is way better. This is GBP JPY. Let's do our top down analysis on it. Okay, so let's delete everything first. All right. So starting from the daily time frame, what can we see? What we can see is obvious. The market has been in a very good uptrend. All right. So it's an obvious uptrend. Then the last significant zone was this. The market swept this low, tap on this level. This is an O and C level, tapped on this level, then give us a break of structure. It gave us a break of structure right here. So giving us this break of structure, we know that okay, this market wants to continue the buy move. All right. Then let's go to the 4 hourly time frame. On the 4 hourly time frame, you can see that we tapped on this level also. Tapped on this level. This level actually swept liquidity, so it's a very good level for the market to buy off. It tapped on it, then it bought, came down to tap on this other block again, then bought again. All right. So let's see if we could get entry now. What can I see? What can I see? What can I see? Okay, so I could see something. Yeah, I could see something. I could see something. I could see something. Let's go back to the 1 hourly time frame. Okay. So see something now. This market, when the market buys, it didn't take out this low, this high. It respected it, then came down again, still respect this low, went up, it swept this high, but it did not invalidate this one. So this sell trade setup actually stands because if you observe, there's this resistance level that I tapped on using these zones as inducements. All right, so it's tapped on this resistance level. Then after tapping on the resistance level, what do we have? We have a break of structure. Because if you are following structure, this is the last low that created this high. Then the market invalidating it, giving us a break of structure. So seeing this, we know that okay, we're actually bearish on GJ for now. We are just bearish. All right. So once you look for our entry now, where is the best place to get our entry? All right. All right. So I could see something. So this zone now, look at this zone. This zone swept liquidity has this inducement. So this is a very good zone safe to even look for a sell entry on GG. This is a good zone to look for sell entry. The market came very close to it, but it didn't tap it. So this is a good zone to look for a sell entry on GG. So you could just place your sell entry right here, stop loss down here, and we'll see. All right, so this is my setup on GG. I think I will check this we check this UJ again. All right, but let's check what gold is doing. Okay, so gold is still cruising around, but we are expecting gold to come to this our zone. So I will send you guys the trade setup to the academy so you guys can place your limits. All right. So this is what we have. And let's do a bit of pep talk on trading psychology. You know, let's do a bit of pep talk. Let's do stuff. Okay, so we have like about 4 people here. All right, so someone asks, what is an inducement? Okay, okay. So an inducement is like a trap zone. Yes, you could call it a trap zone. So inducement is like this is where some traders they put their stop loss. Then the market is going to like weed them out. Immediately the market stop them out, it will start buying. That's like that's inducement. It's a trap zone. Can you explain what liquidity sweep means? Okay, so these things now. Let me just show you guys what liquidity sweep means. All right, so this is a liquidity sweep right here. Who's drawing on my screen now? Don't draw on my screen. Who is this person? Who is this person? So this is a liquidity sweep right here. Let's say the market is in an uptrend. This is an uptrend here. So the market is in an uptrend. Then the market will do something like this. It's going to take out this low. Like normally, uptrend was supposed to just be respecting each lows. Like you see the way this one came, this market didn't, this low didn't take out this low, then give us a new high. Then normally we're supposed to continue the trend like this. Then what the market just do something like this, take out this low and continue buying. So something like this now, this is liquidity sweep and this is inducement. So let me explain. Let me explain. Let me take this thing off. All right. So this low now that the market just took out is an inducement because a lot of traders now want to buy from this thing here. This thing stressing me. Okay, so a lot of traders now they want to buy from this level right here. They want to buy from here now, putting their stop loss right here because they know that okay, market structure is supposed to just be expecting and going like this. Normally, this is the textbook market structure, but we all know that this is not how the market moves. This is what you see on the textbook that the market is supposed to just be going from higher highs to higher lows, higher highs that way. So some traders now will be taking buys here. They'll just put their stop loss here. But what the market will now do, the market will just sweep them out. You get it will sweep them out as if the market wants to change structure, but it will continue going up. So when you see something like this, this is liquidity sweep. This is liquidity sweep. Then for the inducement is almost the same thing, but the inducement now we know that okay, we're expecting the market to sweep this thing. We'll take this zone as our inducement. Then if there's a good zone here, then we'll take our entry from somewhere here. So people now that take their buy from here, they'll get stopped out. And we now, if we take our trade from here now, we now that will take our trade from here will be in the trade. All right, so that's why we always want to look for our inducement in every trade. All right, like see this trade now. This gold that I sent to you guys. Look at this gold now. So this gold, first thing first, the market swept liquidity. Like you could see this move that the market just quickly take out this low, then it buys. This is what I'm saying. Yeah, like when the market quickly take out the low, then buys. Then the inducement now, this inducement now is something like this. A lot of traders now will be buying from here. They'll be buying from here. But now what we want, we expect the market to sweep them out, like stop them out, then tap on our zone before buying. Are you guys following? All right. So let me see what you guys have. So do you guys have any other question? And then Blessing, do you understand inducement? Blessing, you are the one that has the
Yes,
right.
yes, I do.
Eh,
Yes.
all right. So this
But
suppose
it sounds a little bit like liquidity sweep as well.
yes. Inducement. You can also call it liquidity sweep. You get is same thing. It's just the market taking out early buyers or early seller. So it's the same thing. It's
Okay.
just different.
Okay.
It's the same thing actually. It's the same thing. Okay.
All right. Thank you.
Benson, you have a question. Ask your question. Benson, are you there? Benson Eniola? Yes, yes. Unmute and ask your question.
So I wanted to ask that why is it that sometimes if we take a trade, then the trade like closes on maybe the stop loss is meant to close on, and the trade is still going on for for some people. Why is it that it happens like that?
Come again, sorry.
I
Come
said
again.
there are sometimes we take trade
Uh,
and the trade is like, because normal the trade starts from loss before it goes to profit.
yes.
Then the trade stops at where it is meant to stop on your stop loss. Maybe like you're losing $2, then it stops on $2. But other people are still taking the trade, but yours just stopped. What could be the issue?
Okay, so something like this, some issues you can face is one, your broker, and two, spread. So if you're using a broker that have a large spread, you might notice that some trader will stop you out. It won't stop other people using broker with tight spread. Do you get? Do you understand what I'm saying? So if you have a large spread, let's say
Yes, I understand.
so if you have a large spread and let's say the trade now is a sell trade, the market can easily just stop you out. Like it will just stop you out because of spread. Then it will start going in your direction because of you got stopped out with spread. That's why if you know that okay your broker have spread, try to be giving it extra space. You understand? Like let's say you want to take a trade
Okay.
and the trade is about 30 pips stop loss, and you know that okay your broker has like a 2 pips spread, you can just increase your stop loss a bit to like 32 or 33. So I know that okay if the market is stopping you out, it means the market is not going your way at all. Than for you to get stopped out, then the market will not go to your direction. That's very painful. That can be very, very painful. All right, so do you understand?
Okay, that's my question.
Please, how do you know your broker's spread? How do you find out?
You just have to know now. You just have to know. But which brokers are you guys using? If you are using broker like Edway, they have a good spread. If you are using XNet also have a good spread. Yeah. So except you are using some brokers now, some brokers that are not very popular, and then you can be experiencing large spread. All right. XM, yeah, XM has large spread. This is one of the broker that have large spread. This XM broker, it has large spread. I've used it before, but I do not like the spread, so I just select the broker. If you want to be using the broker, it's still nice, but what you just need to do, you need to be adding extra pips so that you don't get stopped out on a winning trade. You get. All right, so is there any other question? Do you guys have any other question? Okay. So we just have few minutes. So let me quickly just use this few minutes to tell you guys on risk management, because I see that this is one of the most important topic in trading. If you do not get it, you will end up blowing a lot of accounts, and it's going to take you long time to make money. All right. So risk management. What is risk management? Risk management is how you manage your risks. And normally, they'll tell some people that, okay, risk management is for you to be risking 1% of your account on a trade. But except you have like a $10,000 or $100,000 account. Okay, someone have a question, but let me quickly say this thing first. So, except you have a 10,000 or $100,000 account, that's when you can start risking 1% on your account. But if you have a small account like $100 or $50, you know that okay, there's really no much um risk management you can do on that account, but you can still manage your risks well. So how me I will do it now? If I have a $50 or $100 account, then what I will do is that I'm just going to give myself, if I have a $100 account, I can give myself 10 chances on that account. Yet, so what I want to do is that I want to be risking $10 per trade, because I know I'm here to stay long. Because some people now might risk all the accounts on one single trade. Fine, if the trade goes well, they'll make a lot of money. But imagine that trade do not go well, and that's the only money you have. What you do now you don't even have capital to trade. So now once you don't have capital to trade again, you are no longer a trader. You'll just be watching the chart. You'll be watching people making money, but you can't make money because you don't have capital. So if you know that okay, you don't have capital, and you like if you even blow your capital, you don't really have means of getting capital as soon as possible. You want to manage your capital well. So what you just do is that if you have the $100 account, you can split it into 10 places. You know that okay, now you have 10 chances on that account. If you take your first trade and you are risking $10, even if that trade is a loss, you still know you have like 9 chances left. Even if you take a second trade and it's a loss, you still have 8 chances. And even if the third one is a loss, and I know that it is not common, that it's very rare that you say we just take three trades and all of them they are losses. It is not common. So even if it is a loss, you still have chance. And the way I trade, just one win. You could see this for my good setup. Just one win now is going to cover up about 5 or 4 of your losses. You understand? So if you risk $10 and if you hit stop loss on a trade, you are just losing $10. You take another one, you hit stop loss, you are losing $10. But if you take another trade and you hit TP, you are making about $30 to $40. That's if you hold to the final TP. You'll be making that amount. But if you know that okay, you don't want to be holding to the final TP, what you can do is that you can just open two positions. You understand? You can just set the first one at TP1. You can set the second one at TP2 or TP3. You understand? Just the thing is just make sure that okay, you are securing partials at the TP1 and TP2. You can say okay, you want to take first one TP1, the second one TP3, or you just say TP1 and TP2. And you can just take one and just say okay, you want to close at TP1 consistently. If you are just eating it small, small. The thing about trading is about compounding. Do you get? So if you are compounding it now, small, small, you don't need to do everything in a day. If you are just compounding it small, small from your $100, before you know it, you've grown your account to about $150, $200. You get, so when you grow your account to $200, what you now want to do now, you want to increase your risks little by little. So you can increase your risks now from risking $10 per trade. You can increase it to risking $20 per trade. So now, if you start risking $20 per trade, you know that okay, your target now will be making about 20 to 40, $50 a day. You see that the fact that you've increased your risks, it has also increased your rewards. You get, so now you'll be making more money because you are risking more, and just small, small, consistently. If you grow your account now to $300, you increase your risk again to risking $30 per trade. So now if you reach $30 and you just hit like TP1 or TP2, you'll be making like 30 to 50 or $60. You see that okay, now you are making more money because you are risking more. That's just how you just stay consistently. You just stay consistent in the game. Before you know it, your equity now will have grown to like $500 and you start risking more. Then when you have big equity like that, now you can just decide that okay, you want to start doing, you see some people now, they can just fund like $50 and risk all the money on just a trade. Then you can start doing those one. But if you know that okay, you don't really have much capital, I advise you to be very conservative. Don't go and risk all your money in one trade. Though. You guys get? Are you guys following me? All right. So who is this? Daniela. You said you have a question. Ask your question now.
Yes, please. Please, is it you were talking about the um the broker and all? I've been having problems with my XM broker, and it's not now that I'll see it, but I thought I could fix it, but I cannot bear with the problem anymore. So, is there a possible way for me to use a different broker, or I should still be using XM?
You can use Headway Broker. That's even my recommended broker. Just use
Headway.
Headway Broker, yeah. Just use
Okay.
if
Thank
you
you.
can, maybe I'll just send you the link later. I don't know how which group you are in, but just use Headway Broker. That's a very good broker.
Yes, please. Thank you very much.
Okay, so someone have a question. Chantal, ask your question.
Hi, good morning. Sorry, Pizza. My question is, so is it possible to connect like two brokers to MT5, like MetaTrader 5, like connect two brokers at the same time? Is that possible? Or you
Yes.
have to download like MetaTrader 5 differently to
No.
connect each broker
You
separately?
can connect even as much as 5 to 10 brokers on your MT5. So once the thing is very easy, just get your broker, you link it to your MT5. There's nothing there. You can connect as much as you want. Even if you want 100 brokers, you can connect it to your MT5. You
Okay,
just
so that means if you want to trade, you're trading one at a time. You can't trade both of them
you
together.
can actually trade the two of them. You just go to your first broker, you go to your first account, you place your trade, then you go back to your second account and you place your trade. There's nothing stopping you there. The thing is you. If you want to trade it, you can do it. If you want to be trading one at a time, it's still fine. But you can place the two trade at once. There's nothing stopping you.
Oh, okay. Thank you very much.
All right. So Willie Okpe, name is long. Ask your question.
Please, good morning. You
Alright.
said you can split your account. Like if you want to risk $10, you can split it and make sure that you risk that $10. How do you split your account?
Okay, so it's not like you will split it to like you just you calculate your weeks. Well, you get like this one now. You need to be applying good weeks management. Okay, you know that okay, you want to be risk $10 on a trade. So what you do is that you calculate your weeks. You guys know how to calculate your weeks. I have a video on that. I'm just going to share it to the group so you guys can watch it. So you calculate your weeks. So you make sure that okay, each trade you are entering, you are just risking $10. And if it is a market execution that you know that if I give a market execution, you won't have time to calculate your weeks. So what you can do is that just enter with the minimum lot size first. You get when you enter with the minimum lot size, then if I give you guys the stop loss, you quickly check your stop loss. You see how much you are risking. If with the minimum lot size, you are risking like $1. Let's say if it's a currency pair, you're risking like $1. Then you know that okay, you want to enter more position to meet up to that $10. And if you enter and you see that okay, your risk is about $5, you know that okay, you just want to enter one more position to make it $10. All right. So what will happen is that the Zoom call is going to end now. But I think I've answered most of you guys' questions. And if you have more questions, just send it to the group. I'm going to reply you from there. You guys get it?
Okay, thank you.
All right, and I'm going to send you guys the video on how to calculate your weeks so that you know how to calculate your weeks. All right. So see you guys later. You guys should take care and trade safe. Don't go and risk all your account on a trade.
Can we get the recording?
Yeah. I'll send it to the group. All right now. Let me end.